Now, Darren Farwell of the Farwell Group joins us to continue our education about investing for retirement and keeping our financial house in order. Good morning, Darren.
Good morning, Marilyn.
What do you have for us today?
Well, 2 weeks ago, when I spoke to From a Woman's Perspective listeners about how things have changed so dramatically in the investment world, like everywhere else, it seems, one of those big changes for our listeners looking to generate a regular, reliable, tax-efficient income that will last the rest of your life, one of those big changes is that interest rates, probably not telling anybody any, as they say, breaking news, interest rates are historically low. And major banks are offering GICs at 0.5%, all the way up to 1% for 5 years. And that income fully taxable. So even for the low-risk part of your portfolio, for most people, that's just not enough. Therefore, one of my recommendations for getting your house in order in 2021 is to review whether there are opportunities to earn more on your savings, even your low-risk stuff. And the fact is, for most people, you can earn more. And for many, there's a very real risk of running out of your savings too soon if you don't. So how can you earn more on your low-risk savings? And when I say low-risk savings, I mean, I'm not talking about switching into stocks or things that go up and down with the stock market. In fact, the kind of low-risk investing I'm talking about isn't connected to the stock market at all. You can earn more on your savings by getting educated about how different types of investments can provide much higher returns without substantially changing your risk. And it's important to note when I'm talking about this that this isn't an all or none type of thing. Just changing a portion of your low-risk investments can bring your financial house in order. And to demonstrate the point, I'd like to talk to you about how it worked for Becky. Becky is 72 years old, widowed, with 3 independent adult children. When her late husband died suddenly 4 years ago, on the advice of some family members and sort of speaking to her lack of confidence at suddenly being solely responsible for the decisions around making investments, as, by the way, 90% of women will at some point in their lives be, Becky got very conservative with her investment portfolio. Now, in hindsight, my suggestion might have been, instead of rushing to conservative investments, Becky's very smart woman, might have spent a little more time informing her, helping educate her about the alternatives so that she'd feel more comfortable. She certainly was capable of understanding it. At any rate, she did move to conservative investments, and Becky ended up with a lot of cash, GIC, some government bonds, and a bond mutual fund. All low risk. All in. Her $750,000 of savings was earning an income of $15,000 per year, fully taxable. And because of Becky's high pension income and RIF withdrawals, she's at a 35% average tax rate. That means of the $15,000, she only keeps $9,750 or $812 a month. Well, that's not really enough to turn the dial. Becky needs more than that to make her plan work. That is, to make sure that she has what she needs, that her savings are large enough to last her lifetime. Because after all, her mother is alive and healthy at 92 years old. So we took a portion of her savings, just a portion, but for that portion, we were able to increase her return to a regular, reliable 5%. This caused her annual income to go from $15,000 a year to $26,250. That's an $11,250 increase, or 75%. Now, I know that sounds like magic. It's not magic. Remember, she was coming off of such a low level rate of return that we didn't need to do a lot to make a big difference. Furthermore, there's some tax advantages that reduce the tax she has to pay on those earnings. So in the end, Becky is earning more on her savings, keeping more of it after tax, and significantly increasing the probability that her savings will last her lifetime. Therefore, my recommendation today for getting your house in order in 2021 is to review the investments you're using to earn your regular, reliable, tax-efficient income. Educate, inform yourself on alternatives that will leave more money in your pocket today and provide confidence that your savings will last, or for money, provide satisfaction that you'll leave a larger legacy for those people and causes you care most about.
Well, that's what I love about happy stories. They really illustrate the possibilities. And Becky's story definitely lets me know that it is positive, and I've always known this anyway, that a second opinion and a fresh pair of eyes on what you've done can increase your income substantially without increasing your risk. If someone wants to talk to you about securing a tax-efficient, reliable income, how do we reach you?
Glad to have take the call at 416-863-7501. And Marilyn, when you talk about taking the opportunity for a second opinion, the investment world really has changed so much that it really is a very good time to get a second opinion.
So open your eyes. You have an expert, Darren Farwell, and the Farwell Group. They'll answer your questions. They'll enlighten you so you can make an informed decision. And perhaps you'll find that you can keep more of your money and achieve a reliable, tax-efficient income. All you have to do is call 416-863-7501 to get started. Thank you, Darren.
You're welcome, Marilyn. I look forward to speaking with you again next time.